8:10, the cow guy coming on, give his perspective on the markets. And then at 8:45, we got a special guest, Jim Tassoni. He's going to talk to us about market action following Jackson Hole. Little market structure talk to start the show. This is PreMarket Prep. We are fired up on a Friday.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, I'm going to go into my triple D mode here, and I'm going to talk really fast. Caught a bid right off the close, really the last couple minutes of the regular session. We're getting back about 31 handles here in the S&P, 56.25 going into the open at this point. Buck down a nickel, quiet day at 101.34. TLT, a little bit of a bid, back over 98, up 30 cents, 98.05. Crude double bottom and a bounce, up $1.42 at 74.43. Gold rebounding up 20.60 at 25.37, and silver taking another shot at that $30 level. It's up 42 cents at 29.47. Bitcoin up about $600, trying to get back and remain in the 60,000 handle at 60,910. We are going to bring on Triple D, and Triple D, we're going to do a little segment here sponsored by FINRA on a little market structure. So take it away.
You want to start with the heavy stuff?
Yeah, let's get it out of the way. Get it out of the.
Okay, so AB's got the screenshot. We'll show the screenshot here last night. I'm going to complain about market fragmentation. I'm going to complain about not getting filled on orders that you should be filled on. So last night, UNH, bring up the chart of UNH first. The chart shows, what happened. So if you can pull up, you're looking at the left chart. See how UNH tanked, and you're looking at the 522. So you can see how it tanked there after hours yesterday. It went straight down to 570.70. Now, I'm not talking about the intraday trading because it traded down there too. I'm talking about after hours and went down there. So there was a step down seller just wanted out. It was like 4,000 shares. Step down seller means they're coming down in the book. There's not much market in UNH after hours, but my filters picked up that somebody wanted to sell. So I'm like, okay, so I went high bid at 571.46. So I go 571.46 high bid. Now bring up the tape because the step down seller just all of a sudden said, get rid of me. Send it to the market maker. Whoever it is, he routes the order out, get me out. So here's the trades. All these trades happen on ARCA, 570.90. Look at them all. 570.90, 243 shares, 298 shares, 328 shares, all at the same second because the seller wanted out. That's on ARCA. I was bidding on NSDQ at 571.46. So they routed through me on ARCA and routed to me. If you look at the very top, you'll see the 571.47 prints. They route to me on NSDQ, but so that way they don't have to fill me. So market maker on the other side is saying, how can we take all this order ourselves without filling anybody on the book? Well, they can trade through you on ARCA because I wasn't bidding on that exchange. So the seller literally got a 56-cent worse price here than what I was bidding. So I was bidding 51.46. And it traded down to 70.90. So they're losing 56 cents there. The seller's getting a worse price than was actually bid on the book. And they can't trade through me on NSDQ because I'm there, but they can trade to me. So it traded 1 penny ahead of me. They call that pennying on NSDQ. That's how you screw the limit orders. Regulators, I know it's early in the morning, but if you guys are listening, we know you guys listen sometimes. This is the crap that needs to be cleaned up. Market makers should not be allowed to trade through you. They also should not be just pennying you when you're talking about a stock falling $6. We're going to trade a penny ahead of the limit order. The specialist.
Why were you on ARCA? Is the question.
Well, if I would have been on ARCA, do you know what would have happened, Joel?
They would have
traded through me on NSDQ and traded to me on ARCA because they're controlling the routing. It wouldn't have mattered. It wouldn't have mattered. So you can bid on any exchange you want. I'm just saying they have all the power. When you have market makers, and we know who they are, that just control the routing of the orders, they intentionally try to screw the seller as much as they can while making sure that they get the bulk of the order or all of the order in this case. It's just BS. So there's regulation in place that tries to help with this kind of stuff, but it doesn't go far enough. Rule 611, SEC Rule 611, we're getting to the plumbing. It's called the trade through rule. It's tried to design so that the seller doesn't get a worse price than the bid, but it only protects the top of the book and it doesn't apply after hours. So after hours, do whatever the hell you want. During the day, if they satisfy the top of the book, believe me, this happens. So meaning that if somebody's bidding like 200 shares at the top of the book and the order is for 1,000, they have to fill the 200 and then they can fill the 1,000 wherever the hell they want lower. So it can actually trade through other orders. So if someone's bidding 51 or 52 is the top of the book and somebody's bidding 51, they can trade it down to 50 if they just satisfy the top of the book. So look it up. That's the rule. They only have trade through protection on the top of the book. So I've argued for years they need to clean this stuff up. These trade throughs should not happen. Seller got a worse price than my bid. And you know what? I didn't get filled, which is even more BS. So yes, I'm ticked off that I didn't get filled, but also should the seller get a 56-cent worse price than the bid? That's where the market fragmentation sucks, folks. That's your first market structure lesson of the day.
There you go. Well, it sounds like it sounds like FINRA has some things it might need to work out there.
This is 15 years of like complaining. Like I wrote stuff back in 2010 about this. So the problem is the people who are writing the regulation don't trade. So they do hypothetical stuff. It's academics, figuring stuff out. You got to ask the traders who are actually in here trading every day where the holes are. That's me. That's why I understand the plumbing and I'm a trader, so I can see this kind of crap that happens. This happens all the time. A lot of times, folks, you should probably be filled on your order and you're not filled because the market maker is screwing you. Reddit boards, Wall Street bets, you've always complained about, obvious people here and market makers. This is the kind of stuff you should be complaining about because this is where you get screwed. This is how the markets are rigged, right here. This is an actual rigging of the markets with evidence.
All right, well, let's get into some earnings. We'll transition from market structure to some earnings reports. Joel's got Workday up there, so let's start there. Workday reported EPS of $1.75, beat the $1.65 estimate. Sales came in at $2.08 billion, beat the $2.07 billion estimate. Subscription revenue numbers were strong. Looks like the company hiked up some guidance. Stock is it dipped initially on this report. It got down to around, 216 or so, and then just got bought straight back up to 262 we're at right now, up about $31, 13.5% on Workday, ticker WDAY.
Crazy movement on this. On the initial report, and you can look at this bar, it looks crazy, but on the initial report, it rallied up to 242. You can kind of see the little bar there. There you see it. See it? Joel, the pop up to 242. Then they decide, nope, we don't like it. They take it all the way down to 214. Sits down there for like a half an hour. Then the conference call happens. They must have said something good on the conference call. And then they rally it up 45 points from the low. That is just all over. We talk about chop. That's the choppiest report you're ever going to see. Up 10, now down 15, now up 25. Crazy movement. And I mean, I guess, this is the market we're in where they just try to screw the news algos as much as they can too. So news algo sees a beat. Well, we got to shake them out of here. So let's take this sucker down here right now, knock it down, and then we'll not bring it right back up here too. Everybody punish the maximum amount of participants. That's how you do it. Shake everyone out.
Sorry, Joel, you're on mute.
Workday. I was saying Workday. You guys don't get it.
We never get that joke. You know why? Because the Workday had the mute thing, but Joel does it accidentally all the time, so we don't catch it.
I'll just give you the price action here. You're in a really interesting area. You're holding a 260 bid. This is where you gap down from earnings last time. So everyone is getting made whole. I would just say it's just throwing darts between 260 and 270. There's not a lot of resistance. So put those offers out there. See if you get lifted. Below 260, I don't know. I don't know where you go with the long after 260. But right now, they're allowing you to sell into strength.
All right, let's keep the earnings.
That'll move up. Remember the cloud name. CRM is your most direct peer. CRM is going to report on Wednesday, so it's trading up $4 on this. Obviously, some other cloud stocks could be up on Workday as well. There's a lot of them reporting. Wednesday is basically cloud day. I mean, there's so many stocks. You talk about NVIDIA being in the headliner for Wednesday night, but then you have Salesforce and CrowdStrike and Okta and Viva Systems. I mean, NTNX, there's just a pile of stocks reporting on Wednesday. So we're going to get into the more cloud names, obviously, then as well. CRM being the highlight from the cloud department on Wednesday night. So, but, we're seeing a pretty good snapback. Maybe we never really talked about the markets here overall, too, before we get into the minutia here. I know we're trying to get in. Oh, actually, we got Cal Guy coming in. It's going to be 8:10. So,
yeah, we're going to keep ripping through some earnings real quick. So let's go to CAVA from Workday. So CAVA reported last night after the close. Woo-wee. Sorry, my numbers are loading real quick here for CAVA. Joel, why don't you get the technical?
Wow, it blasted off. The expected move, I think, was around 7 or 8. So there you got it, up to 112, even printed over 112. You could use that as a target. Dennis, I know we talked about it's already the valuation, but I guess everyone loves their food. They have the most efficient restaurants in the world, and they're going to continue to expand.
This is just story stock.
Yes.
Stocks, they don't care about valuation. I've said it on this show for 10 years. Valuation doesn't matter until the story cools off, and then it's all that matters. We saw this with Lululemon, story years. 45, 40 Ps is just how this thing trades. But then the story cooled off, and then it comes down to a market multiple. Right now, there is no market multiple on CAVA because I don't think it makes any money at all. If it does, it makes like 1 penny. So you can't even value it and look at it like that. It's all about the story. The story remains hot. They're just looking at sales metrics. Sales remains hot. Obviously, still an expansion stage. So valuation doesn't matter at all at this point in time.
All right, the numbers, I got them pulled up now. Sorry about that. EPS came in at 17 cents, beat the 12-cent estimate. Sales came in at $233.5 million, beat the $218 million estimate. So you had the EPS beat, sales beat, and the company raised guidance. So hit the trifecta there. Again, CAVA trading up about 8.5% this morning. To your point, Dennis, a lot of times with these companies that, haven't turned a profit yet and they're in this growth mode, the market likes that as long as you keep growing, and then eventually they'll start asking questions about, hey,
they made 17 cents,
Yeah.
So Spinner always keeping us honest here. They made 17 cents. So what is that? If you did annualize 60, 70 cents, trade 150 times earnings. So they did make money. So I guess we shouldn't say they didn't make money. But what we're saying is, it's not normal for companies to trade 150 times earnings, but when they have story is hot and they're in growth phase, it doesn't matter. Earnings don't matter to this company. Sorry,
and you have the precedent out there with Chipotle. So I think people look at CAVA as a potential Chipotle.
But here, that's a great example. So let's take that and run with that, AB, because Chipotle's market cap, which is best of breed, this is the hope that one day CAVA will become the next Chipotle. And, there is room here. And PE on Chipotle is 50 times. So, they held up pretty well. Market cap, $73 billion. So it is big. It's Chipotle is the biggest one, of all these restaurants with market caps right near the top. CAVA was only $11 billion. So they're saying, if they become Chipotle, this could go up 4 or 5 times as much. But it has so far to go to become even close to the size of that. Because if we look at the current sales, we're talking about, what was the sales for CAVA in the quarter?
Sales for the quarter for CAVA were, let's see, where'd it go?
259 million.
Oh, sorry, I went to I was on CMG.
Am I right?
Yeah, around 245 million.
245 million.
Sorry, 233.5 million. 233.
CMG is $3 billion a quarter. $3 billion.
And the market cap, yeah, okay. I see.
So I'm just trying to say, they got a long, long ways to go. So their market cap is, and again, if they're going to become the next Chipotle, and Chipotle is just not going to matter, and then obviously restaurants are competitive too. There may be that room to growth, but you're paying the premium for that. But again, it doesn't matter. If you're trading the stock, fundamentals are meaningless on this thing because the story is still hot and the stock's making new all-time highs. When stocks are making new all-time highs, it's hard to argue. Stocks go up with ease when there's got blue skies above them.
All right, let's go ahead and bring our first special guest of the day. We got multiple guests today, a little special fun Friday here on Pre-Market Prep. We've got Scott Shellady, the cow guy, hanging out backstage. Without further ado, let's see what the cow guy thinks about today's market.
All right, Scott Shellady, the cow guy here. First question is, are you out of your yen carry trade?
Well, I'm happy I never got involved with it. But I don't think that's over, by the way. I know that the market wants to, brush everything under the rug very quickly. Nothing to see here. Please move along. But I think that was a little bit of a warning shot. I still think we're going to see volatility, actually a lot of volatility. And I think that whomever's going to be the president on January 1st is going to be given a big hot plate of warm you-know-what to manage going into 2025.
Okay. All right, let's go a little bit shorter term here. I'm sure you've been sitting on pins and needles for the Jackson Hole speech at 10 o'clock for Mr. Powell. What a bunch of nonsense here. I guess a quarter, a half, or whatever. I'm the only one that thinks we don't need an interest rate cut, but whatever. Just anticipation, dovish, hawkish, nothingish, all the ballyhoo about the Fed and Jackson Hole today.
Well, they've painted themselves into a corner, haven't they? I mean, you've got part of the market, or I would say a large part of America, that believes that they already feel like they're in a recession. So they maybe would benefit from starting to cut rates. But at the same time, I've asked anybody that wants to come on my show, I'll pay their airfare and their hotel to come in and explain to me how cutting rates is going to help inflation go lower. So they're in a damned if you do, damned if you don't. If they cut rates, they're going to have an inflation problem. If they don't cut rates, they're going to have an American story problem. On top of that, the reason why we haven't been in an official recession, because an NBER has not been able to label one. We had 2 quarters of negative growth, but they didn't want to do anything about that because that would have hurt the current administration back in 2022. But we've had government spending hand over fist. We've basically spent our way out of not having a recession. If you look at those jobs numbers month over month, the government spending has kept us out of a recession, and that's it. But then we've come to learn a couple of days ago that we can't even do that right. We got ripped off because all the money that we've been spending to keep ourselves out of a recession, apparently we bought 818,000 jobs that actually weren't there.
What?
Yeah.
What is it?
Yeah. The BLS came out with their revision saying that from last April to this March, they overstated their jobs numbers by 818,000. So that's a huge revision, the biggest one in the last 15 or 16 years.
How does that happen? How does that happen?
How does it happen that we have continually month over month a headline beat, but then the last 2 months get revised lower? That also flies in the face of, wow. I mean, that's like, we're talking 4 and 5 sigma stuff. Like, it just doesn't happen. Yeah. So we got ripped off. We've been spending money to stay out of a recession, and we bought 818,000 jobs that were absolutely fictional. So look, I'm bearish on what the economy looks like here. But I am bullish on, I think that, artificial intelligence is here to stay. I think there's some good things out there, but that doesn't mean we can't go lower for a little while here and or maybe even go sideways. And my last thing I'll say is this, I had all the licenses myself for my entire life, to sell stocks. I've been a stockbroker, commodity guy, income guy, fixed income guy. But what I don't like, what I'm seeing now from 2008 forward, if you go back and take a look at the S&P going back to, say, 1970, there's a clear line, a demarcation line in 2008, 2009, where you can see the Fed becoming ultra accommodative. And it seems like now, and I guess 3 weeks ago, whenever that was, the hiccup we just had 2.5 weeks ago, it just seems disingenuous to me that every time we see a decent sell-off in stocks, everybody comes out of the woodwork calling for the Fed for an emergency 1% rate cut. Yeah. The Fed's got to rescue us. Why? I mean, if the Fed's not going to let the market go down, this is a rigged game. I mean, I would love to go back to be a stockbroker, because if you come into my office and say, I've got a 3-year time horizon or longer, I'd say, just put it in the market. The Fed's not going to let it go down. Commodity guys have to worry about markets going down. And I would argue, even say sometimes interest rate guys do. But with the Fed coming to the rescue all the time for the equity guys, it smacks of disingenuous, and I don't like it. So whenever they change that tune, which I don't know if they ever do, but they have to come to, you can't continually screw with the laws of nature all the time, because ultimately it will come back and boomerang back and hurt you twice as bad had you just let the market do what it was supposed to do, because they're continually trying to manage an outcome, and it's not going to work. So at some point in time, we have to come and pay the piper. But right now, it's put your money in the market, because they're not going to let it go down.
It's short-term gain for long-term pain.
Yeah.
I mean, this is really what the Fed, this is really what everything is, our administrations, and it's not just the Dems, it's obviously the Republicans.
Oh, it's both. Yeah, I agree. It's not, it's apolitical. And fellas, look, we can't, I talk about it all the time on my show, because it's the biggest thing that nobody talks about. That's our debt, $35 trillion. We're going to we have a $2 trillion budget deficit, annual budget deficit. And so the reason why we don't talk about it is because people can't imagine what $1 trillion is. They hardly can imagine what $1 billion is. But if I said it to you if you would have spent $1 million every day since Jesus Christ was born, you would not have spent $1 trillion yet.
Oh, it's unbelievable when you say that.
I know, and it's like 700, 750 billion. So we're 35 trillion in debt. If a second is $1 on a clock, 1 trillion seconds ago was 31,677 years ago. It's mind-boggling, and nobody cares, because at some point in time, we're not going to be able to sell our bonds, and interest rates are going to go through the roof because of it. Just saying.
Wow. And then just how long is this? Like, again, this is where interest rates have to eventually come back down too, because the debt's so high, they won't be able to service the interest payments.
Right. Well, wait.
Like,
we've crossed that threshold, the Rubicon of we're starting to print money just to pay the service on our debt, not even the principal. We're printing money to pay the service on our debt. And our service on our debt will be the biggest line item in our budget next year.
It's sickening, really, when you think
it's farcical, but nobody wants to do anything about it because it's unelectable. You can't make it to Washington saying we're going to stop spending and I'm going to trim back your entitlements. That's just not electable.
So Scott, you mentioned, you think AI is here to stay.
Yeah, I do. Yeah.
How are you playing this? So you buying NVIDIA? Are you?
Yeah, well, I haven't bought it yet. I missed my opportunity. I wanted to get it below $100. But when
you had about 1 hour there that Monday morning.
Well,
it was under $100.
That's me being too much of a trader, right? I got too cute for school on that one, because I thought, well, it went down to 90 so quickly. Here we go, right?
Right.
I'm 70 bid. Come to Papa. Well, it didn't quite work out like that, but it doesn't mean that's over yet either. You'll be able to pick those things up. There's going to be a time where we start to run a little long in the tooth when it comes to AI, but it's still going to be a great place to invest. And I still love the American ingenuity and our tech sector. It's going to be the leading. I lived in London for 16 years. Our tech sector is the envy of the world. So those things are going to be safe plays. You just need to buy them on dips and get good prices for them and hold on to them for a long time. And again, as long as you have a 3-year time horizon, the Fed's going to be in your back pocket too. They're going to help you out.
All right, Kyle, going to let you go here. I don't know if you saw the news that, another firm pulled out of the London's metal exchange. So, and the only reason I mentioned that is, you see the cow guy here, and that was his coat on the floor. I had a red jacket, which is, most of the locals wear red jackets, but I didn't even know they were still on the floor down there. So we're losing the open outcry, cow guy. So me and you, we got to keep the spirits alive. Okay.
Some point in time, my grandkids are going to say, "You really wore that and yelled and screamed and tried to make money?" And I'll say, "Yeah, I really did."
You have to stand out though on the floor there. So you're trying to get people's attention. Hey, I'm buying here.
Exactly right.
More than you.
Exactly right. It's like
you got an edge.
I go in the speaking tour a lot, and I tell people, it's like, yes, it helps garner attention, but it also helps that it's kind of a cross between, say, John Candy and Liberace. So that helped too.
There you go. All right, Scott Shellady, enjoy the rest of your day.
Fantastic.
We'll have you on soon. Thanks for joining Benzinga's Pre-Market Prep.
Have a good weekend, fellas.
All right, great segment. The cow guy, Scott Shellady, joining us here on Pre-Market Prep on a roll today.
You got to change the title of the show this this today, it's going to be change it to everything is rigged, because we've had 2 segments on how the market structure is rigged,
Oh, that's
the economy is rigged. I mean, everything is rigged. This is just where we're at here. So, I mean, that's the title of the show.
Vegas is rigged. I lost another parlay last night by 1 leg. I had 6.
Vegas is rigged. Inflation data's rigged. It's all rigged. Everything is rigged. And it's the truth, folks. This isn't like, like making it up. It's all rigged.
I'm playing in a pickleball tournament today. Hopefully that's not rigged
that's
as
rigged
well.
too.
But if I lose, then we'll know it is rigged. So, all right, let's get back to some of the PM after hours earnings we had yesterday. We did CAVA, we did Workday. Let's move to Intuit. Intuit, of course, the tax solutions, Intuit TurboTax. You guys know the company. Reported, let's see, earnings. Oh, stock's quiet off this report. EPS of $1.99, beat by 14 cents. Revenue of $3.18 billion, beat by 90 million. So the company issued EPS guidance above estimates. The company also approved a new $3 billion repurchase authorization. So all in all, it looked like a strong report for Intuit, but the stock dipped initially, got bought back a little bit, and you're trading pretty flat here today, up about $4.
Same exact thing as Workday, really. Like, it ripped, and then it dipped, and then it ripped again, and then it dipped again, and then it ripped. I mean, the oscillations here on these earnings reports are nothing short of incredible. Obviously, Workday has settled much higher, so the end result is much better for Workday. But the oscillations on these reports, because the books are empty and the algos just buy, oh, sell, oh, buy, and they don't know what to do. And there's just not that much, there's nothing on the books. So just like a few, 1,000 shares really pushes price around. And sometimes don't rig. We might as well continue the rig theme. Joel, this goes on. Let's just say you're an institution, you got just a pile of stock and you don't like it being down here. Well, if you go buy a few thousand more shares, you can push that price rate back up. And then media will come in and say, oh, it was a good report because the price is higher. So there's even rigging of the prices on these things. Everything is rigged.
The taxes are rigged too, that they're trying to help you with. Why do I got to pay a higher tax rate than Elon Musk? That's rigged.
Yeah, because he doesn't sell anything, but yeah.
So, have I told the story about Intuit and Quicken Loans and Rocket? Have I told this story before?
I don't know.
It's a great story. So Intuit back in '99, back at the time it was Quicken Loans, right? Well, they bought it. They bought Quicken Loans for Danny Gilbert, and I don't know exactly what kind of price they paid, but they didn't really know how to run it, or they just didn't pan out the way they wanted. So Danny Gilbert bought it back at a steep discount to what he sold it at to Intuit, and then he rebuilt the company.
I'd say smart. Who's smarter than Danny Gilbert?
Yeah.
Portnoy, same thing. Portnoy, same thing. Barstool Sports, we'll sell to Penn, then we'll buy it back for whatever, $1 or whatever. Now we'll build it back up again.
Yep.
There's a gas station around the corner for me. It's been sold like 3-4 times, and what they do is they build it up, build up the business, sell it. The person they sell it to runs it into the ground. Then they rebuy it for like pennies on the dollar, and they rebuild it up. Then they resell it again. They did it 2 or 3 times. That's a smart business. That's not even about being rigged. That's smart business right there.
Yep. And I just looked at this rocket chart. I mean, this thing's exploding here. Look at this. From 13 to 20, you get the good. That is a monster move.
That's your interest rate move.
Yeah,
that's your interest rate move right there. They need lower rates because everybody's going to want to refinance at lower rates there. So nothing benefits more from lower rates than something like Rocket. That's a pure play on rates right there.
And
interest rates are going down. They are projecting them to go obviously down, significantly here when they're moving them up like that.
Yep. And
UWMC, the competitor you have on there too. Same thing, same story. I mean, sometimes it's just like know the path of interest rates and position yourself and forget all the noise. And interest rates are going to start going lower. And TLT, same thing. Should probably just be blindly buying the TLT, on every dip that you get. You got a dip there yesterday because rates are going lower. The Fed is already projecting it. The amount of the decreases, might we don't know if it's going to be 50 or 100 or, how much it's going to be this year. but we know their path is going down, and that is good for everything that's interest rate sensitive. It's good for bonds to buy bonds, in my opinion.
You know what? It wasn't good for just going back to solar, really tangent here. CSIQ yesterday, Dennis. I mean, I don't know. So, I mean, so is that
But they haven't seen any of the benefits of lower rates yet either. So in an earnings report, you're not going to see it yet. But does that mean that it's not going to benefit them? And the other consideration for the solar companies here too is they are now in a cash burn situation. Some of these, like Canadian Solar made 2 cents. I mean, you had SunPower that went off. Did SunPower go bankrupt? Is it official? It's 12 cents. I think it did. So you've got a lot of companies, solar companies, that just may not even survive even with lower rates. They're just too precarious of a situation. I don't know if Canadian Solar is that one, but we just saw it happen with SunPower, which was a darling 2-3 years ago. Not the case anymore. We know First Solar is best of breed, so it's going to be okay. Full disclosure, I have a small position in First Solar. And then obviously the SEDG we've talked about in ENPH. I mean, these stocks have just been absolutely murdered here too. But if rates start to actually go down, I think they are, the survivors, and I don't know, maybe CSIQ won't be a survivor, maybe it will. Survivors will reap the rewards here. First Solar probably going to be a survivor. ENPH, I think, will be there, and it's holding up fairly well. SEDG, the jury's out here. But if you think rates are going lower, and we do, these stocks could be okay. But again, if they cross a threshold where it's not even going to matter, where they're already in trouble, like SunPower, that's where the tipping point is. I don't know if Canadian Solar's already crossed that threshold, and they may not even benefit from lower rates because they're already in too much trouble. Tough to say.
Okay, AB, you're going to reel us in here. We got some more earnings to cover. The stock making new all-time highs here in the discount retailer Ross Stores.
Yeah, let's go to Ross Dress for Less, one of my favorite stores to go to. If you need a place for socks, if you need a place for socks or underwear, anything like that, Ross is the place.
Where do you go?
Did I have them up here? I don't know.
Oh, okay. Because I
always went to them back in Missouri. Let's see, Ross Dress for Less, Michigan. All right. Well, I'm trying to find that. Let's go to the
off price. Off price is working. We've saw multiple reports.
Walmart versus Target. We've seen that trade down effect. So EPS came in for Ross of $1.59, beat by 10 cents. Revenue of $5.29 billion. Wow, that's a lot bigger.
A lot of underwear.
Yeah, $5.29 billion, beat by 40 million there. They changed their EPS outlook for the fiscal year for $5.79 to $5.98 to $6 to $6.13. The estimate was $6.01. So a big EPS guidance raise there. Stock up about 6% this morning, like you mentioned, Joel. New all-time highs.
Well, yeah. Wow. I'll just give a quick technical comment here. I'd had to pop off the TJX. People have said, I am getting out. I am selling. The other people buying are saying, wow, I hope this is a good report. The late buyers into the report after the double gap up. Holy mackerel. This is a messy chart. I'll give you a target, 163.24. You're $2 away. I'd use that level. Top of yesterday's range. Way down at 154.11.
I did locate some in the Michigan area. We got
Where?
We got one in Livonia out by Plymouth, and we've got one in Southgate, apparently.
Really?
Yeah, we'll
Never been to one.
All right. It's just like a TJ Maxx or a JC Penney. Like they sell stuff that didn't sell from like the big department stores. But I'm curious. You get a pack of brand name underwear there for like $10 for 5 pairs. It beats going to Gap or anything like that. How's Gap doing, by the way?
My quotes were kind of wonky on that yesterday, but it still has that major area of resistance. You got going back over the last 7 sessions, it's got to knock out this 24.50 seller. Maybe you're doing that today. Look right instead of left. Maybe you get a bid here at this 24.50 area and keep on going. It's up on only 2,000 shares. So there's a look at the new Gap.
They all want to talk this FFIE right before we get our next guest here on. It's
we got
really
a few minutes
popped up here in the last few minutes here. I mean, it was actually trading down, I think, when we started the show, and it just exploded here. So obviously there's a headline. I don't follow the story, although we did say it. We did trade this. Remember, this was one that I brought to you with high short interest back in May when this was 4 cents. and the thing obviously exploded, and then it did the reverse split, so you got to adjust. So I guess it would be 40 cents, and I'm going to 150 bucks. I sold way too soon, but we were talking about like this being on the high short interest list, and then all those high short interest names with GameStop and Roaring Kitty coming back, and I was like, this one could go too because it's got high short interest, and holy cow, did it ever! Like then a couple days later, just exploded and then continued to go. Come off. Obviously, the high short interest stuff, goes in spurts. And if you look at this thing, it's way off the high. So you can get really excited here and say, what a pop from 8 to 10. But you know what? This was $156 3 months ago. So, I mean, you lost 90 whatever percent of your money, not 93% of your money from those highs. So things go up, things go down. But when, you get these crazy, crazy moves, it's usually a ring the register opportunity. I don't know this one specifically if it's going to be a ring the register opportunity. It's got more gas in the tank. I'm not even sure what the headline is here, but it's been moving.
I mean, Dennis, you've been doing this long enough. You should know that some of these smaller stocks don't necessarily need a defined headline to move like this.
It feels like it was, though, because I looked at it like it wasn't doing anything, and now the volume just exploded. So something happened. Somebody said something somewhere.
Yeah, you're talking right now.
No, $7.50, Joel. It was $10 when I come. It wasn't me, and don't make stuff up.
No. I'm just saying it's going crazy right now.
It was going crazy, Joel, when I brought it up. The chat was going crazy to talk about
this
it.
This is one that also
it's nothing to do with me, so don't kid yourself.
I'm sorry.
Absolutely nothing to do with me. Joel's just saying something that's not true at all. So $8 up to 10. It was $10.50, so it's exploded here. I'll tell you, somebody said something or did something, because the stock was doing nothing all morning until about an hour ago, and then it just exploded. So I don't know what the headline here is.
I'm going to pass on this one since I already got in trouble.
All right, there you go. Joel's biting his tongue here. All right, let's move. All right, we did all the after hour earnings from yesterday. Anything else we need to? Oh, we did have, Joel, I'm sorry to inform you. As good as it looked yesterday, we did have a downgrade coming in on Peloton. Stock is trading down about 2.5%. Where was this?
That's one of the stupidest downgrades, and I am doing nothing in the stock. But you're downgrading it now? Like when did they have it?
JP Morgan.
Do
they have a buy on it and they go to hold or something?
No, they downgrades Peloton to neutral, lowers price target to $5. So I guess
where was the price target before?
Overweight.
Where was the price target before the number?
$7.
Yeah. In any regard here, they've been wrong. Everybody who's been bullish the stock has been wrong. It's just a disaster. You know what's going to happen too? Again, we're in short squeeze central, a little bit right now. Everybody's a little bit antsy in their pantsy. So, maybe this can get another pop up or something like that. But the bottom line here is this company is burning cash. And you know what they do? We know what companies do when they burn cash. They get a pop in the stock and then they do an offering. It would not surprise me at all.
Yeah, you said that yesterday.
Peloton, but I said to you guys just before we started the show, it would not surprise me at all if Peloton did an offering in the next couple of days to try to take advantage, because they need money. So just keep that in mind, that stocks that pop when they're dogs of all dogs and they're burning cash, when they get these pops, they usually use the opportunity to raise some cash. So just be careful chasing this one.
And we just follow up on Zoom from yesterday. Wow. What a move in Zoom there yesterday. Boom. And getting some follow through today. So just couple dogs barking.
All right, well, let's see. It's 8:40 here. I'm just going through the pre-market movers here to see if we've missed anything else. No, we've hit most of the big pre-market movers here. Looks like, public storage is up about 5%. PSA, I don't know how much we care about that. Was that an earnings report? Let me go into my pro and find out. I do see our next special guest hanging out backstage.
Yeah, does Jim? If Jim is, he'll pop his camera on. Yeah, why don't? It's 8:40. Why not? I'll just get a quick preview here before we bring Jim on. We haven't talked about Jackson Hole yet, right? And that's been the buzz all week. And what's going to happen? The thing with interest rates. So I wanted a little bit of a historical perspective on things, and Jim's going to pop in here for a few minutes and do that. So roll the intro from our guest, and then we'll bring Jim on.
All right, let's go ahead and bring Mr. Tassoni back on Pre-Market Prep.
Jim Tassoni. He's the CIO, CEO of Armor Wealth Strategies, giving us always a longer-term perspective on the markets. Jim, how you doing on this Friday?
Good, Joel. How are you guys today?
Good, good. We're having a fun show. So you have to follow the cow guy, okay? And and you got a purple polo on, so that's okay. But help us put this Jackson Hole into a price perspective.
Yeah, absolutely. And I prepared a quick slide here of that, so I will go ahead and show you guys that if I can.
Present, and then the screen.
I got it. There we go. Can you guys see that?
Yep.
Okay.
Let's go ahead and pop that up here. There we go.
Nice.
All right. So this actually stemmed from Joel and I having a text conversation last night. I started texting him as I was doing some research around the Jackson Hole event because I wanted to just sort of dig into, we know it can be kind of a volatile day. We know it can be a tough day to trade, especially intraday when you've got the algos jumping on every single headline that comes out around that 10 a.m. Eastern speech. So what I did is I went ahead and I looked for some information on what we can expect. And I think as you can see from this chart that the market does tend to be fairly volatile on these days, especially since Jerome Powell started giving the speeches. The average move on the speech day is actually, as you can see, 0.6% to the downside. So we've actually had negative days when he's been speaking. Now, let me put that into context. The median day is actually 0.4 to the upside. And you can see the reason for that being is 2019 and 2022, we had significant down days on these speech days. And so a lot of volatility, a lot of possibilities for moves. 2022, some of you might remember, that was the speech where Powell promised pain ahead for the economy, that he was going to raise rates no matter what. He was going to crush inflation, and it spooked the market. That year, actually, I did some further research and saw that we actually had the market down 6.5% a month later and 12% over the preceding 6 weeks. So it was a huge flush to the downside, not predicting that, not saying that's going to happen. But I think when you're trading on these type of volatile days, having a historical perspective is helpful because it lets you know that these type of moves are possible. Now, Joel, Dennis, and Aaron, you could give me the transcript right now for this event, and I still am not sure that I could make money trading ahead of this thing. A lot of the time on these days, I tend to stay to the sidelines and see how things play out. And that kind of takes us to the second slide, if we can see that. These would be the levels that I'd be watching right now, given where we're at on the SPY. And kind of that pivot level.
Can we zoom in on that a little bit, Aaron, just so we can see it a little bit better? I have glasses I can't see, so maybe we can just blow it up a little bit more just to get closer into those pivots. I guess people can see it now.
Yeah, I can only do this if Jim can zoom it in a little bit on his end.
Oh, sure. Yeah, absolutely.
Yeah, just zoom it in a little bit more there if you, yeah. It's okay. We can see it now.
Does it look better?
It looks like if you look like you go on that bar on the bottom right, you'll be able to, you could zoom it in a little bit, potentially.
There's a bar going left and right on the bottom right. We can see it on the screen. It's a plus minus bar on the bottom right of your screen. And then you can make it bigger or smaller.
Bottom right corner, all the way.
Yeah.
Yep.
The bar.
Yep, here we go.
The bar is low.
Yeah.
Oh,
okay.
The bar is high.
Perfect.
Okay.
Perfect. Thanks, Jim.
All right. I'm okay at the markets. Been doing it 20 years, but technology still a Luddite. So I apologize in advance for that. But with that being said, here's kind of the levels longer term that I would be looking at. These are kind of swing trade levels that I've identified. I'm still bullish overall on the markets, especially the broader markets, S&P, the Qs. But I would be watching that 547.80 level as my pivot. A close below that today, which is a significant move from here. We're trading right at about that 559.35, 559.40 level pre-market. But I think if we got a whoosh down and we couldn't hold that 547, that would change my overall feeling to being more neutral to leaning bearish in the short term. As long as we stay above that, I want to continue to look for moves to the upside. But a close above 559.30 today, which is kind of right where we're at, if we can hold here and close above that, that would make me even more bullish. It would move me from kind of bullish neutral to bullish overall on the markets. And I would really be leaning into longs at that point. So I think if we can get through this speech, and then obviously we've got NVIDIA earnings next week, that'll be a market mover. If we can get through those things and still maintain closes above this level, I would get really bullish over the next, 4 to 6 to 8 weeks heading into the election.
It's such an interesting stat. I just want to go back to your previous slide there, Jim, and just expand on it a little bit, because you're saying the average since 2018, the average is down 0.6% on these speeches. Is that somewhat to do with maybe the fact that stocks and the economy were doing really well for a few years, then he's trying to cool it off, and then so maybe we could get the opposite effect here today, where he's actually going to talk about rates being an issue, or is it the stock still hot enough that we could because obviously he knows what the market's doing overall, and he knows as he's coming in whether he wants to kind of cool off the markets or not. Do you think that's the case here today, like that he wants to cool his markets off? What's your thoughts on like how Jerome Powell and the Fed is personally looking at the markets today?
Yeah, so I think you're spot on, Dennis, with that past analysis. I think those big drawdowns were definitely market overheated, and he took the opportunity to try to throw some cold water on the markets and cool them down. I don't think today is similar to that. I think we're sort of on the other end where everyone's expecting rate reductions. But I think, as you and Joel and Aaron have talked about on the previous handful of shows, that's 100% priced in. So I think it's more the level and the scope. I think we're going to be keying in. I think everybody sort of expects that it's a done deal, that we're going to get, that they're going to lower rates in September. I think what people are going to be keying in on is how dovish Jerome Powell is, how much he talks about the duration of interest rate reductions, the scope of them. I think the algos and people in general are going to be leaning on that. Whether or not it becomes a follow-through move and people are relieved and excited about what he says, or conversely, does it become a sell the news? Like everything's baked in already and we got exactly what we thought. There's no new news. We've already baked all of this in and stocks sell off. And that's what I kind of said. I hate to give that political answer, but that's why I would be more watching price action here and seeing how the market reacts over the remainder of the day after the speech, because I think it's really difficult to anticipate no matter what he says. Like I said, even if I had the speech ahead of time, I think it's really difficult to anticipate how the markets perceive that overall.
All right, Jim, thanks a lot. That's a good perspective on things. Just the equations of things that I'm looking at. I'm looking at the low from this week that was made on Monday is a big barrier, or big support. Things are still good to go on the upside. And then I'm looking at the high close for the week. I know we got above it. The high close for the week was made on Wednesday at 41.50. So let's see how we shake out in between those parameters. Jim, great information. Thanks for coming on Pre-Market Prep with us to preview Jackson Hole.
Thanks, guys. Have a good one. Good luck.
Thanks, Jim.
All right, guys, that was Jim Tassoni giving us some color before the Jackson Hole. And yeah, those are always the interesting events, is when you could know what's coming and still not know how the market's going to react to it.
It is. It's like, we know there's going to be, he's going to say, we've made a lot of headway on inflation. We know all that stuff's going to be saying. Is he going to be saying inflation's dead? Probably not. but is he going to be saying that we've made enough headway that, we are confident in the next course of action, to going into this lowering cycle? I mean, if he gives any hint that it could be a 50, if he gives a hint that he's maybe, that's when the market would really explode. So it's exactly right. He's going to be dovish, and how dovish is really the case here. That's really what it is. It's going to be about tone. It's going to be about, specific words. They'll pick apart every little word that's said. And it's always about the Q&A. I mean, because that's where you can catch them in saying something that wasn't expected.
All right, well, let's bring it back to the markets here, Joel. Let's get your charts back up, and we'll go through some ratings here that we've got. I'm just going through my Benzinga Pro, looking at the analyst ratings. Yeah. Chewy back in the news after, of course, we had the Ryan Cohen, Roaring Kitty debacle, not debacle, but a couple months ago where Chewy was going crazy because Roaring Kitty tweeted about it. Roaring Kitty rallies after Piper Sandler upgrades ahead of anticipated profit inflection point. So Piper Sandler is expecting Chewy to become profitable here. Stock is up about 65 cents or 2.5% this morning.
It's a retail loved stock. So when you see an upgrade on a retail loved stock, there can be follow through. So obviously with Jackson Hole, it's going to be a wild card for the overall market at all. But, up 2.5%, you'd say, yeah, it's worth 2.5%. I was trying to buy it last night at 26.5 and 26.60 on the rating, and I just couldn't get hit. It was like 26.75, and it did come in there a little bit. Again, hard to get hit on your bids because they come to your price and they won't fill you on your price. So I figured it would be up. I figured it would touch the 27s this morning on that rating, but not to be. I couldn't get a hold of it. So now you think you kind of fair value at 27. Now you're going to be in a wait and see on Jackson Hole in the overall market. I just think it's hard to do specific company analysis on anything here right now ahead of a big macro event like Jackson Hole.
Jay Rice makes a good point. Went from 20 to 27 since the yen carry trade.
Big move.
Yeah, that's a big move. Pet Q was bought out. But I just look at this 20. I can only really look at 28. I mean, that's, I'm not trying to pick tops. I'm not buying it. They're selling it today. But that just looks like a really important level. So you're only at $27. So you're playing this one off the hop. Maybe look at a target at 28 for Chewy.
We talked about Workday earlier. Workday also getting some analyst love this morning after the positive report. You had, let's see, Needham coming in, maintains its $350 price target. Stiefel maintains hold on Workday, raises price target to $270. So again, you see that a lot where a company reports a good report and the analysts all come in after the stock is already trading higher and saying, oh, we love this, we're going to raise the price target.
Yeah, well, that's what they do. They always try to want to be in line by the end of the year, so they keep adjusting the price targets that makes themselves look like geniuses. We already did the technical on Workday. It's continuing to go higher here now. I mean, after last quarter, the expectations were fairly low maybe, but then you had the run up into it. It was, an interesting report to say the least, because like we said, it got hit hard, and then they said something on the conference call, and they've stopped nonstop buying. Let's just talk overall market here.
Well, I was also going to, Dennis, I don't think we ever mentioned the Uber story that broke.
Let's do Uber.
Let's do Uber real quick, then we'll go overall market, then we'll get to our last guest of the day. So Uber Technologies was this yesterday after the close, right, Dennis? Yeah, announced a partnership with Cruise.
General Motors Cruise.
Yeah, Uber and Cruise to deploy autonomous vehicles on the Uber platform. Cruise, of course, was GM's subsidiary, which I believe GM may have sold its stake in Cruise. But
I don't
Cruise,
know if they did.
Okay, chat. Chat, fact check me on that.
Cruise.
Fact checker.
Yeah. Someone. I thought GM.
GM is still Cruise, but they've backed off on some of their investing. They're again. So there was some headlines with Cruise, but GM's still Cruise. That's the autonomous. So Cruise is the autonomous, self-driving portion of GM that they're working on. Obviously, trying to beat Tesla.
pop and drop.
Got it. Well, Cruise is either way one of the companies that's operating the autonomous taxis already in Phoenix and San Francisco. So now Uber is partnering with Cruise to bring some of its autonomous vehicles to the platform. The stock popped initially on the news. Uber went up to around $75, and then it went all the way down to below $70. Came back and is now trading still down about a little bit more than 1% this morning, 86 cents, trading at around $72.50 coming into the open.
It's interesting that this popped, and you would think it would pop. Uber, I'm talking. GM's up because it's obviously a deal for them, but Uber popped initially fairly significantly, like almost, I don't even think you have the top of that bar, Joel. I think it almost hit 75.
74.97.
So right up to 75, basically
Yep.
right under 75, screwing the 75 sellers like they do. And then they just pulled the rug out from under it and tanked it down to 70. So, I mean, this went from 75 to 70. It felt like in a heartbeat. And then it's down on the day, and you're like, well, how is this bad news for Uber? And the only thing I can think of is maybe they wanted Uber to have like an internal solution or something here, because
I don't know.
like I've said the biggest risk to Uber and Lyft is autonomy, because there's going to be so much competition coming from autonomous rideshare, and we know Waymo is giving them serious competition in San Francisco. So now they partner with Cruise, and you'd think like logically, well, okay, well they're going to be part of autonomy too, and this should be logically good news for Uber, but they didn't really take it that way. They took it as bad news, and maybe, like I said, they wanted an internal solution or something. Like Uber doesn't have any autonomy, so I'm trying to grasp why it would trade down on this, but it didn't. It traded down heavily afterwards, and if the chat has any thoughts here, we can go with it too, but it's still trading down on this. It doesn't seem like bad news to me for Uber. And then conversely, I would think, well, this can't be good news for Tesla.
That's exactly what I looked at.
I actually tried to short Tesla on the headline, like just
know.
my trading account, and then I turned around and covered it because Tesla's just started rallying on it, and now Tesla's up $3 on it, and I'm like, really? I'm like, how is this good for Tesla? And again, this is on my long-term account. This is in my trading account, so completely separate entity. So I do Tesla long, short all the time. I don't know why. I don't know why this was not good for Uber and seems good for Tesla. I don't understand the market's reactions whatsoever.
Well, you got a confluence with the pre-market high. If you get up there, 75.40 was the high on July 16th. I'm just saying maybe you got some buyer exhaustion here in Uber. I mean, just back on August 5th, you were at 56.86, and now indecision at the 73.74 area. So I think people are looking for a reason to take. It's like they're nervous. Like, are we going to break out over 74? Is everything fine? We're going to 78. And then you get a pop, obviously caught some people. You got to think this is going, supposedly good news. It's not going up. That's not a good sign. But what I would look at would be the close. Like if this is really good news for Uber, they're going to take it back unchanged on the close. High of the move, it's a little bit higher than that. But I look at that resistance at 73.34. Also, I just want to talk GM after getting absolutely annihilated after its good report. It's climbed its way smartly back. And the last thing I want to mention is before we wrap, Lyft. Remember you were talking about a catalyst? It got that insider buy.
Yeah, the insider buy.
Yeah, and look at that. You got a quad top at 11.80.
And it got an upgrade today. Somebody upgraded it to neutral left today here too. So anyways, I don't know. Like if Uber doesn't rally on that, it's not good news for Uber. So okay. I'm not trying to say this Uber. I'm surprised it's not up on it. Then it's down on this. I think it's actually really bad news that it's down on this for the stock.
All right, Dennis, final thoughts on this Jackson Hole day after we are trading at the highs of the pre-market section.
I think he's going to be dovish. I think the market may dip, but I think eventually the dip buyers come back in. So hard to be bearish this market. A lot of people have been caught. They're obviously coming in to buy the dip overnight. I think any dip that we get probably gets bought again. So I'm actually bullish stocks on dips.
Okay, I'm just looking at the low from yesterday, which coincides with your low from Monday. So we're holding out. If you think we're ending the week on the high, we got up to 65.25. For me, the high close of the rebound in the S&Ps has been 41.5. That was Wednesday's close. That's within earshot. So if you want to use a softer number as a level today, And then also on Monday, we're going to be bringing on Jonathan Corpina from the New York Stock Exchange, floor guys from Friday and Monday. So that's it for me. Everyone, thanks for your comments in the chat. And
now stick around, though, because we have more content coming for you here. We got some special content coming, so stick around.
We do indeed. I got my man Zunaid hanging out backstage, and there he is. Zunaid, how you doing this morning?
I'm doing great. I can't believe you guys had a guest called the Cow Guy. I feel like I need to maybe come up with my own nickname after that. I'll think about it. But where do you find the guest Cow Guy?
We've already named you. Zunaid, you're Zed.
I don't have a Zed outfit. The Cow Guy came dressed as a cow. I mean, I love it.
It's from the floor. He was on the floor. But anyways, we're cutting in everyone's time here. So everyone have a great day.
All right, see you guys later, Aaron, Joel, Dennis. And hey, look, when the substitute teacher comes in, we've got to get you some goods. Ross, I'm going to go ahead and put you up on screen. We've got my man Ross Gibbons up on the show. Ross, welcome, man. How's it going? Good morning to you.
Well, hey, good morning to you. I feel unprepared. Nobody told me to get a cow suit or anything. So
I mean,
I feel like an idiot.
Listen, the chat is lucky I put a polo on this early.
Wow.
Yes, it's a little early. Well, hey, man, look, so much of the conversation here today has been about the yen carry trade. NVIDIA, of course, reports next week as well. What's going to happen in Jackson Hole? But I want to give the folks that, it's your first time on the show here, give the folks a little bit of an idea of what your trading style is and what you do.
Well, thanks for the introduction. And look, I mean, to put it simply, I'm a follow the money guy. I learned a long time ago, and I'm a reformed value investor, just so you know. And you learn, over the years, like, I don't care what the company's worth, what the earnings are.
Yeah.
It doesn't matter if the headquarters is on a pile of gold. If investors don't want it and they're selling it, it's going down, period. If they want it, it's hot, it's going up. So we're very much a follow the money, both in terms of institutions, the big funds that actually move stock prices, like they were discussing earlier with the situation going on with Uber and GM, the dinosaur, probably why that thing tanked. And also insiders is a big part of what we do. And so that means corporate insiders, CEOs, CFOs, executives, when they're buying their own stock with their own money and their own account, especially when it's the first time they've done so in many, many, many years, we see a lot of good opportunities there. And this is going to naturally gear more towards small to mid cap stocks. Usually, that's where the opportunities are. So think biotech's pharmaceutical development stage. Suddenly they're all piling in out of nowhere, right? It's like things are probably going well, and oftentimes they are. But that is kind of the general approach we take.
Yeah, we'll talk about NVIDIA here in a second, but are you seeing any other opportunities in the markets based on the strategy of whether it's insiders buying and selling or anything else happening in the markets outside of NVIDIA? Because I will get to that.
Yeah, well, one of the big areas, probably the most, if I had to bet on something the next 6 to 12 months, it's probably the home building sector. This thing was teed up for a big move in 2024. You likely saw it. The whole sector is setting up to break out. A lot of the stocks look great. And Powell and his clown show at the Fed were promising 6 rate cuts. They didn't happen. So obviously those stocks cooled a lot. But now we're finally seeing it. The 10-year yield's coming down. Hopefully the guy finally steps up at Jackson Hole and admits or anticipates these rate cuts we've all been looking for. But we're seeing a lot of strength in there. So stocks like BLDR, stocks like DR Horton, Green Brick, Generac, KB Homes, all these showing a lot of strength, setting up, compressing for new breakouts near their highs. And look, as someone who is currently selling a house and building a house, I've seen what this market is like. I think we're going to have a big housing boom, these new builders, something we thought we'd get this year, likely in the coming months.
Well, I know we've got live trading coming up after you and I have an interview, and I know the guy slacked me about the NVIDIA trade possibly. I don't want to give away too much of the juice. And guys, if you want the insights from Ross, you can download it 100% free. We put the link in the chat. We'll put it here again as well. But give me a little bit of a tease in terms of what you're seeing with NVIDIA, because what I'm seeing in the news is, people are trying to bet calls, but my man, the CEO has been selling for quite some bit. I think I saw maybe over almost $500 million or so. I don't know the exact number, but he's been selling.
Oh, the guy's dumping it hand over fist. Yeah, I mean, he's cashing in. And look, I don't want to argue that, hey, maybe there's another 5, 8, 10% upside on NVIDIA. But I mean, I think if you're taking that trade, you're walking on train tracks picking up nickels, right? I mean, this thing is supremely overvalued. And I call me a dinosaur, whatever on this thing. But look, I've read a lot of investment books over the years. Not one of them said, wait until the stock is worth $3 trillion and it's worth more than Germany's GDP, and then start buying it, right? It's very, very high. And the tell, as you said, is the selling. We've got Huang, the CEO, brilliant guy. No one can argue that. And he's dumping the stock, $25 million a day. He's selling this thing. So I've got the chart in the write-up. People can click that link, I think, and get it. But I show a graphic showing the volume of insider trading in the stock over the last 5 years. And you'll see this kind of slow grind and this mountain of selling over the last couple of months. And it's not just him. You've got board members. You've got the executive vice president. You've got EVPs. You've got the chief financial officer. We have the principal accounting officer. We've got, they're all selling this stock. So it's not very typical to think, hey, we're about to report really good news. We think our stock is undervalued. It's got 50, 100% up from here, and we're going to dump this stuff hand over fist. Typically when we see that, it is at or near the top. So that's our big warning on NVIDIA, just following the money from, again, the people inside, the guys who know what next quarter's numbers are looking like, who know what's in the pipeline. And that's not even mentioning the real problem that no one's talking about is they've got tons of engineers who are worth $10 million now, right? These guys all get, in the tech world, it's all about getting equity in those stock options. And they did so, but everyone on here knows what NVIDIA has done in the last 2 years, right? So these guys got stock options. You got engineers making $250,000 a year with $10-12 million worth of NVIDIA stock. So you gotta, you're gonna ask yourself a logical question. It's, look, I've got 30 years, 40 years of my salary sitting here. How long do I need to keep working, right? What's the upside?
So it's kind of clear where your thoughts are on NVIDIA based on what the selling is happening. Now, of course, again, folks, if you want to get the exact play, I think you have an options trade in that free report. Correct me if I'm wrong. So you guys can download that 100% free. Go to the link that's pinned in the chat as well. We got about a couple more minutes with you. So you have a webinar coming up, I believe, at 11 o'clock as well. And I think it relates to the same theme that we've been talking about, where you have, it's based on insiders buying and selling, and that's how you're able to kind of form a thesis, look at the chart. Is that right? Or what can folks expect at 11 o'clock when they go to your webinar?
Yeah, look, I try to compress 10 years of knowledge into about 45 minutes, but that's the generals. The idea is very simple, right? It's when you've got, in this case, we're talking about selling with NVIDIA, but buying is far more profitable. When you've got these off the radar stocks and suddenly the CEO, the CFO, vice president, 2 directors are all loading up out of nowhere, personal account, that's often a really good sign. So we kind of look at it as like, look, worst case, things are not bad. They're not piling their money in, right? Best case, they're very good. And what we see is oftentimes we get some really big moves in the stock. I mean, we bought a little biotech, CATX was the ticker back in January. It was like 40 cents a share, but they're in the middle of stage 2 clinical drug trials. They have no, it's make or break on this report. And then suddenly we have the CFO, we have directors, we have the VP, we have the chief medical officer, the guy running the drug trials, put 60% of his salary into the stock. So we bought it and it went up like 345% of the next few months. We got one last month, went up 50% in 3 weeks. So they're not all going to do that, but you're often going to get these totally off the radar stocks you're not watching, no one's heard of, that have really good news coming. And we use these insider signals, they're buying, as a trigger to get into them. So we try to show people how that works, how you can get this information in nearly real time. Like they buy Monday, we usually know Tuesday. How to track it, what to look for, things to look out for, and just kind of go through our entire strategy. And it's really eye-opening to a lot of people, especially folks who've lived on technicals and charts. It's like a totally different approach. And even for, our very advanced traders, they're taking this kind of as a watch list going, okay, well, here's the stocks they're all piling into. If I get a technical setup on that, plus I got the insider buying, plus all this, it's like that many more things. So, we've had great results. We've been doing it since 2017. We've never had a down year. I mean, we're long only. And even 2022, we returned like 30% that year.
You have the saying where it's like, put money where your mouth is. And I think a CEO can go ahead and talk about earnings, about guidance, and hey, here's what we're expecting. But to actually go ahead and buy, to me, an insider buying is a better signal than insider selling being a
True.
worse signal, if that makes
True.
sense to me, my
No, you're
personal
right.
opinion. You know what I mean? Because
No,
selling,
yeah.
you can kind of schedule and be like, oh, it's for tax purposes, whatever the case is.
Exactly.
We had LinkedIn, by the way, funny. Nice little username there. Asked, did I post a link in the chat? Yes, it was posted. It's pinned, and I posted it again as well. So here's what we get before we wrap up, right? With that link there, you get 100% free, absolutely not a single penny that you need to put down. Free report on not just the trade idea that Ross has for NVIDIA's to play via options, but you also get the thought process. I've checked it out. He's got charts making it look nice and pretty. And you also get automatically registered for the free 11 o'clock webinar that he's going to have today as well. So a bunch of great value. Ross, let's do this. The markets can always change. I feel like the chart may look different for NVIDIA after Jackson Hole. I don't know. So I'd love to figure out your schedule, maybe bring you back on Wednesday,
Sure.
right, which is when NVIDIA reports, just to see if your thesis has changed.
All right.
But, best of luck to you, man. Any final thoughts before we go?
No, I think that's great. I mean, I hope people register for that. Again, the report's free. And, let us show you what we do and decide for yourself. It's going to be today at 11 a.m. Eastern. So look forward to seeing you guys there.
You got it. I went ahead and posted it one more time in the chat. Ross, thank you so much for your time, buddy. We'll see you next Wednesday.
Hey, sounds good.
Take care. All right, chat. We appreciate you for being patient. I know Ryan is ready and excited to go ahead and get things going for you. And, yeah, like I said, I've looked at the report, obviously, and, there's some great insights. And what I love is not just a trade idea, but the reasoning behind it. Because what matters is if you at home agree with the thesis, and therefore do you agree with the risk management aspect of how you can go and execute on that trade. We'll get you guys and gals over to live trading with Ryan. Thank you for watching. Happy Friday. Happy trading.